If you're a UK taxpayer and you use Revolut, whether it's for your personal spending, your business, or for dabbling in crypto, you are definitely going to want to listen to this. We're about to pull back the curtain on what HMRC really thinks about your account and what that means for you.
So, how do we know all this? Well, this whole discussion has been developed with the brilliant tax experts at My Tax Accountant. They're a top UK firm, and they've given us the inside track to get you the most accurate, up-to-date info out there. So, let's get into it.
So let's just start with a really direct question, right to the heart of it all. Do you think your Revolut account is kind of invisible to the taxman? The answer might genuinely surprise you, and it has some pretty big consequences.
Right, here's a quick look at what we're covering. We'll start with Revolut and HMRC. Then we're going to bust that big offshore myth wide open and show you exactly how HMRC's, well, everything. We'll talk about the serious price you could pay for getting it wrong, and we'll wrap up with a simple checklist to keep you on the straight and narrow.
Okay, section 1. Let's get right into the core question, because honestly, everything else we talk about today builds on this one point. Let's not beat around the bush here. If you take one thing away from this, let it be this. Yes, HMRC can, and they absolutely will, access your Revolut account information if they have a reason to. The whole idea that these new digital accounts give you some kind of shield from the tax authorities is, I'm afraid, completely false.
And that leads us straight into a very common and, frankly, pretty dangerous myth. So many people misunderstand how these accounts actually work, and that misunderstanding can turn into a very, very expensive mistake. So here's the difference between what people think and what's actually happening. The myth is that your Revolut account is private, it's offshore, and it's totally beyond HMRC's reach. But the reality, it's regulated right here in the UK, your data is shared automatically under international agreements, and your account is completely visible to the authorities. Now, here's a little bit of the legal stuff you need to know. In the UK, Revolut isn't technically a bank. It's what's called an electronic money institution. But don't let that term fool you. It's regulated by the Financial Conduct Authority, which means it has to comply with all UK financial laws. And that includes handing over your data to HMRC when asked. There's just no loophole. So how does this all work in practice? I mean, how does HMRC manage to see transactions that are zipping across borders so easily? Well, let's follow the global data trail. It's a surprisingly automated process. It all kicks off the moment you get paid. Under this huge global agreement called the Common Reporting Standard, institutions like Revolut have to share financial data. HMRC then feeds that data into its incredibly powerful AI system called Connect. Connect then compares that info with your tax return. If it spots a mismatch, boom, a red flag is raised, and that often leads to a full-blown investigation.
And the scale of this thing is just staggering. We're not talking about a couple of countries. Over 100 jurisdictions are signed up to this. That includes places you might think of as traditional offshore havens, like Switzerland and the Cayman Islands. They are all automatically sharing financial data every single year. The age of financial secrecy is well and truly over.
So what sort of red flags is this Connect system hunting for? Well, undeclared crypto gains are a massive one right now. So is business income that doesn't quite line up with your tax return. Large or regular international transfers can also get you noticed. On top of that, Revolut itself has to file a suspicious activity report if they spot anything unusual. And sometimes it's as simple as a tip-off from someone else. Believing that what HMRC doesn't know can't hurt you is an incredibly risky game to play. In this next bit, we're going to look at the real-world consequences of not being transparent. And I'll warn you, the numbers are pretty sobering. Stay with me. The next point might surprise you. Okay, let's start with crypto because it catches so many people out. The capital gains tax allowance for the 2025/26 tax year is just £3,000. It's been dropping, which makes it incredibly easy for even a casual trader to go over that limit. Any profit you make above that amount has to be declared. It's a very common tripwire. Now, for any freelancers or small business owners out there, this number is critical. The VAT registration threshold is £90,000. If your turnover, and that's your total sales, not your profit, goes over that in any 12-month period, you are legally required to register for VAT. Using Revolut to get paid doesn't change a thing. And these aren't just abstract rules. They have real consequences. Let me give you an example. A UK freelancer in London brings in £40,000 from clients through Revolut, but on their tax return, they only declare £25,000.
HMRC's Connect system spots that £15,000 gap instantly. The result? A painful backdated tax bill, plus interest, plus some very, very heavy penalties on top. And when I say heavy penalties, I mean it. For undeclared offshore income, the maximum penalty can be as high as 200% of the tax you originally owed. So, if you owed £10,000 in tax, you could be forced to pay that 10 grand plus a £20,000 penalty. That's a £30,000 bill. It's designed to be financially crippling. And it can get even more serious than that. As this quote from an HMRC spokesperson makes crystal clear, we're not just talking about money anymore. In serious cases, deliberately evading tax is a criminal offense. That can lead to prosecution and, in the worst cases, a prison sentence of up to 7 years. The stakes are incredibly high. Okay, that was the tough part. Now let's switch gears from the warnings to the solution. The good news is that getting compliant is completely within your reach. This section is all about giving you a clear, actionable plan to get your affairs in order. So here it is, your 5-step plan. 1. Keep meticulous records for at least 6 years. 2. Declare all of your global income, all of it. 3. Calculate and report every single penny of capital gains from crypto. 4. If you've made mistakes in the past, use HMRC's worldwide disclosure facility. Coming forward voluntarily can massively reduce penalties. And 5. If you get a nudge letter from HMRC, do not bury your head in the sand. Respond immediately. And here's a quick pro tip that will save you a world of pain. If you are self-employed, please open a dedicated Revolut business account. Mixing your personal and business spending in one account is a massive red flag for HMRC. It looks messy, it makes your own bookkeeping a nightmare, and it makes an investigation much more likely. Just keep them separate. Now, while that checklist is a fantastic starting point, tax can be complicated, can it? Especially when you throw international income or crypto into the mix. And that brings us to our final and perhaps most important step of all.
The core message here really is simple. Don't risk it, get it right. For specialized advice on your Revolut account, offshore income, or any other tax questions, the smartest thing you can do is speak with a professional. The specialists at My Tax Accountant live and breathe this stuff. You can reach them on 0208-570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. And just before we go, a quick disclaimer. Please remember, the information in this discussion is for general guidance only. Tax laws are complex, and they really depend on your specific situation, so it should not be relied upon to make financial decisions. Before you take any action, you must consult with a qualified professional, like the experts at My Tax Accountant.